सो वेलकम बैक एवरीवन. ट्रेड विद केरन में आपका फिर से स्वागत है. सो टुडे विल बी लुकिंग इनटू द मिस्टेक्स दैट अ रिटेल ट्रेडर मेक्स and that can wipe out their whole account. So I have made this small PPT so that I can address these things before diving into zone identifying or directly jumping into trading. So these things should be kept in mind, and they should not be exploited anytime in your trading journey. So these things will keep you disciplined, and it will help you survive and succeed in the market. So let's begin. So number one point is over leveraging. So what does leverage means? It means that you have a small capital with you, for example 100 rupees, and then your stock broker gives you a leverage of 5 times or maybe 20 times. So then with that same 100 rupees amount, you can purchase up to 500 rupees stocks or 2000 rupees stocks, or maybe in some cases 20,000 rupees stock. So this is leverage. So you have invested just 100 rupees, but you are enjoying the profit of let's say 20,000 rupees or 40,000 rupees. So that's what leverage is. But leverage is like a double edged sword. So इसमें अगर प्रॉफिट होता है तो बहुत ज़्यादा प्रॉफिट होता है, बट इफ़ इट गोज़ अगेंस्ट यू देन उतनी ही स्पीड में आपका कैपिटल भी ब्लो आउट हो सकता है. सो दिस इज़ वन थिंग दैट यू हैव टू कीप इन माइंड, दैट इवन इफ यू आर यूजिंग लेवरेज, so no, never overdo it. Keep yourself within your risk appetite, and everything will be all fine. So now let's go to the second point, that is no stop loss. So generally what happens is most of the new traders, they don't know this concept called as stop loss. So उनको पता ही नहीं होता है ये concept के बारे में. They just download the app, and then they just complete the KYC and all those things, and they just watch few videos on YouTube, and then they start randomly trading. And no doubt उनका हर एक ट्रेड उनके ऑपोजिट ही जाएगा, एंड वो धीरे धीरे करके उनका पूरा कैपिटल ख़त्म कर देगा. सो having a strict stop loss is must. So if your trading journal or trading rule does not allow you to lose more than 2% of your invested amount or 5% of your invested amount, then you have to back calculate the everything, back calculate the entry price and all those things, and then you should mark your stop loss perfectly, so that even if you hit your stop loss, then you will just lose a very small amount of money. But if you don't have your stop loss set, if the market starts falling, you will not get an option to exit early. You will probably get an exit way below your stop loss, and then you will have nothing left in your hand. So just keep in mind, whenever you enter a trade, please mark your stop loss based on the calculation of 2% or 5% or 10% based on your portfolio. Now let's move on to point number 3, that is revenge trading. So this particular problem is seen generally in the beginner traders who are early in the trading journey, such as like 6 months or less than 1 year. So what really happens is a retail trader, a beginner trader, start trading on day 1. He'll make very small profit based on the YouTube videos he has watched. Then day 2 he'll have a slightly bigger profit because of the portion size or the position size increment which he has done based on the confidence gained on the day 1. So like that, he'll keep on increasing his portion size, and then at the 6th day or the 7th day, his position size will be too huge to handle, and in just one blow his account will get blown away, and he'll be in a different state of mind. He'll be finding out new trades. He'll be looking into chart 24/7, and he'll be like, in this I'll trade, in this move I'll trade, and all those things. And like that, the number of trades increases, and so does the brokerage. So let's say on a regular day you are just trading 5 or 10 stocks. So the, what do you say, brokerage you were paying is was around, let's say, 100 rupees, but now you have lost 5 times in a row, and then now you're thinking that in the next trade I'll be recovering everything. In one trade I'll recover everything. So what really happens is, every time you enter, seeing you got stopped out when you were in a buying position. Let's say you were in a buying position and you got stopped out. Now you'll think that, okay, now I'll enter the sell position. So then what really happens is, as soon as you enter sell, it will again flip, and then you'll exit from there also, and then you'll make a new entry in the buy side. So this cycle will keep on going, thinking that in one, even if one trade gets hit or it's a winning trade, then I'll recover all my money. So what really is happening is, earlier you were just trading 4 to 5 orders in one day. Now you are near about 60 to 70 trades per in a day, or maybe even more than 100 trades in that day. So that itself increased your brokerage, and moreover, in that state of mind you will never make money. In that state of mind you will just lose money, and that too really quick. And so just keep in mind, if you have hit your stop loss for the day, you don't trade, you just close everything and then just relax, do your other work, and plan everything after the day ends or the market ends. So let's dive into the next point, that is blindly following tips. So this particular topic is really sensitive, because a lot of new what do you say beginner traders, they tend to join hundreds of telegram groups through YouTube or through friend suggestion and all those things, who like who gives daily tips, or whenever they think, like in a day in a market, they'll put regular updates like buy 2200 nifty call, or sell this call, sell this put, and all those things. They'll be active on those telegram groups. So from there they'll pick up some tip, that now I have to buy this stock at this price and then sell it at this price and this price, and all those things will happen. But those tips are really fake. Those tips generally are created by the operators who want to pump the stock market, and then as soon as he hits his profit target, he'll quickly exit it, and at that moment you will be entering in the market, and you will definitely get a stop loss hit. So don't blindly follow a tip. If you want to follow a tip, then make sure that you have a proper backing of it. Backing of means you do your own analysis on that particular stock or that particular entry, and then if you are comfortable taking a huge loss or that much loss, then you can go ahead with that tip. But for a ethical point of view, or for a safety point of view, never follow tips given by anyone. Like, you should be in a position to believe yourself, and that will come through understanding supply and demand zone concept and trading. So now let's go to next point, fifth point: no risk management strategy. So what really happens is, let's say a trader or a beginner trader starts trading, he makes 10% every day for 3 days in a row, and then suddenly he'll increase the portion size, and then he'll see that on day 4, no, earlier, like in till day 3, whatever amount he was generating, like he has generated the same amount in just one day, that is day 4. So he'll gain like a overconfidence, he'll be on overconfident, and that's really risky, because in that state of mind we tend to forget our rules, that 5% a day or 2% a day kind of a stop loss values and all those things, and we tend to lose mind, and we take wrong trades, and we fall into a trap of what do you say big institutions. So uh, this is one point in risk management. The other point in risk management is let's say you set a 2% limit on your account. Let's say your account size is 10,000 rupees, and you said like on every trade I can lose 1%, that is 1,000 rupees. So or else yeah, for on every trade I'll be losing 1,000 rupees, and I'll be happy with that, and that's my plan. So let's say first trade I lost, second trade I lost, third trade I lost. So now I am down by 3,000 rupees. But my other rule, it says that if I am getting into a trade, I should be aiming for, let's say, 1 is to 3. If I am risking 1,000 rupees, if that trade works, I should get 1 is to 3 profit, or 1 is to 5 profit. So let's say we are aiming for 1 is to 5 profit. So on the first three trade we have lost 3,000 rupees, but the same has been covered up in the fourth day, where we have achieved 1 is to 5, that is 1,000 rupees risk and 5,000 rupees reward, which we have captured in the day 4. So these are the kind of risk management strategies which we'll be seeing in the upcoming videos. And you'll be taught different ways, like if you don't have enough money, or if you don't want to take enough risk, then without reducing the size, or without reducing the, or no, if without entering the trade, how you can manage all those things, it will come in the next few videos. So now let's hop on to the last part. Thinking trading is easy money. Like, trading is not easy money. You should make that clear in your mind. You should tape it down to the wall in front of you, in front of every mirror, and all those things. So trading is not easy. What is easy is you put really hard work into learning something, learning new skill, and understanding it by from the core. So that is easy. But if you just think that trading, I'll just wake up one day, I'll put 1 crore rupees or 10 crore rupees, and each trade I'll be making 25 crores or 50 crores in just one day. So that's not easy money. So that's not going to happen. Like, in the beginning stage, if that happens, that's a beginner luck. But it never happens with anyone. Everyone has to grow small, bit by bit, bit by bit. So, like, there is a famous saying by Neil Armstrong, smaller steps for a bigger leap. So what does that means? This means that keep taking small steps, or keep taking small profits, and you will eventually see that after a year or so, the portfolio which you will be handling will be so big that you will be proud of yourself. So learn right things, learn from good people, good teachers, and just be loyal to whoever you follow, and uh, keep a faith, keep keep learning. And we'll be continuing this series ahead with marking of zones, understanding each and everything from the basic, from the scratch level, from the next video. So I thought these few 6 topics were mandatory for everyone to learn or grasp in the early stages, so that by the time we start trading in the real money or the real world, you won't face such problems, and you won't blow up your account. So that's it for today's video. Thank you so much.